Welcome back to CNBC Asia Trading Day. There's a lot of action going on in Asian regional stock markets. A lot of markets are weaker today for various domestic reasons. Let's start off in the Philippines. Manila shares entering their... And turning to China-related companies listed here in the Hong Kong market, both red chips and H shares are losing their glitter. During the last quarter, their share prices have fallen close to 50%. Regional woes and domestic concerns in mainland China are being blamed for the poor sentiment. CNBC Asia's Phyllis Fang reports on how much further Hong Kong's mainland Chinese stocks could fall.
Investors have been fleeing, dumping holdings of red chips and H shares. The last 3 months has seen those stocks nosedive in tandem with most regional markets. Red chips Chinese companies with operations in Hong Kong and mainland assets have lost 50% of their value, and H shares Chinese enterprises listed here are off by 40%.
I think both the red chips and the H shares perform, their performance followed the other markets. But in addition, I think there has been just a string of bad news.
China is facing prospects of lower economic growth and the specter of yuan devaluation. Add to that the recent order by President Jiang Zemin for the PLA to get out of business. But analysts trace the downfall to the meeting of the National People's Congress in May. News of a ministry shakeup was a clear sign the way these companies were going to do business would be changing. What lured investors to red chips was promises of asset injections from parent companies and the guarantee of good political connections. But with those promises on hold and the region's economic woes drying up capital, analysts are rethinking ways to value these companies.
On the red chips, I think without the asset story, then you will have to compare the red chips with the other local conglomerates in Hong Kong, the likes of Hutchison and Swire Pacific.
So with red chips up against better managed and more solid Hong Kong conglomerates, they've had few takers. But analysts are mixed over the trend of China-related shares.
The worry over the red chips and the China shares, it won't go on forever. If it's limited downside, let's say at the most, 10% from these levels, then institutions would be accumulating on the way down.
I think the macro story will affect the share price in the near term. And so the market condition is actually quite difficult in the near term.
And that is with the expectation there will be no major economic disasters along the way. But with everything in the region so volatile, China Place can expect much of the same. Phyllis Fang, CNBC Asia, Hong Kong.
And lots more ahead on Trading Day, including our regular focus in Southeast Asia, including the latest economic numbers out of Singapore, and up to 1,000